Guys, I thought I'd just quick video here to just explain swing failure patterns and why they become my go-to in with Bitcoin, especially of late. This is not TradingView, it's Trading Light, so liquidity and shows open interest and things like that. I took the trade last night around this level here. So I identified these lows, these equal lows here, as what I call bad lows, right? So there's just liquidity behind that, and you could see that on this heat map last night as well. So I wanted confluence, right? Basically, confluence of that would be a fib level of this move here, right? So matches right up with the 618, this level here, okay? And then this is maybe a little technical, but if I turn on the TPO, you can see that swing failed right into what this is green line here is what's called single prints, right? So when price moves so fast through a level, it misses that liquidity at that. So price tends to, after a big move up here, come back and take what's called a single print. Okay, but I'll turn that off for now. So how did I enter? Right. So once I got the alert that we had this price quickly move back through, I go to like a lower time frame, right, and it was here, right. So this was the moment you saw open interest started to fall off. So basically, longs got squeezed out, and we're forced to close their position. All right, so we're now on like a 5 minute chart. So on the 5 minute chart, when we had a big candle down and then back, I just drew a fib level here, right? So from swing low up to swing high. Okay, so price came down and then it got back above the key level I was looking at, and made a high, and this is what I call market structure after the potential swing failure pattern because it hasn't played out yet. So then as price retraced, I placed orders, stacked orders from the key level that I identified where the liquidity was, which coincided with the 618 fib retracement, all the way down to the 786. Okay, so the golden pocket. My stop then went below the wick here, right? And as soon as we made a higher high here, my stop then went to break even. Okay, so that's basically how it entered. And then obviously there's not a lot of volume up here, so now I'm looking for it to do exactly the same swing failure pattern. Take this liquidity if it gets back in under, wait for market structure on the low time frames, enter in on a retrace, and then ride it all the way back down again. And that's basically it, mate. Swing failure patterns. You don't need a trading light. This is a paid subscription for this sort of thing. You can do it off TradingView, but open interest is pretty key. So if you take out some liquidity and open interest continues going up, whether it be price moving down or price moving up, then you don't want to take the trade. Open interest needs to come off, meaning that there are liquidations and people are forcing or stop losses are being hit. I hope that made sense.